All righty. Thank you, Lindsay. Take it away.
Awesome. Good afternoon, everyone. Thank you so much, Nick and Donna, for always extending the invitation to serve your clients. I'm always super appreciative, very honored to really just be in this space of support. As Nick mentioned, my name is Lindsay Peel. I am the Chief Wealth Officer here at Kingdom Vision Consulting. Just a little bit about me. My background is in banking and finance. I spent a number of years within the retail banking space, serving in every role within the retail branch, starting as a part-time teller and transitioning out as a branch manager and business development officer. So all things banking, all things personal finance, and really how to structure your business finance are some of my zones of genius. I am a alumni of Howard University, the real HU. I'm a second generation entrepreneur. A lot of people try to figure out, well, Lindsay, what really motivates you to do what you do? And really it's my parents, being able to see them build a family business and to allow me to create the life of my dreams has really, really, really equipped me with the inspiration, but also the knowledge and the desire to come back and pour into my community. I'm all things community engagement. So whether that is nonprofit board leadership, whether that's serving in the community, or really just being a pillar of resources for our entrepreneurship community, I am your girl. A little bit about Kingdom Vision. Our goal really is to educate, empower, and encourage entrepreneurs, specifically entrepreneurs of color, to really employ financial strategies that allow them to create generational wealth. I know that we use the words generational wealth very loosely nowadays, right? But in order to really effectively create that, it starts with the wealth within yourself, right? Are you creating a financial foundation that is sustainable, right? That is stable enough to be able to then build a business on top of that, to be able to take care of your families and the communities in which that you serve. Our vision, our long-term goal is to just contribute our part to breaking the poverty cycle and shrinking the racial wealth gap for communities of color. I know that I might not see the end of it in my lifetime, but I want to make sure that I'm doing my part to chip away, right, at the cycles that I've seen, and a lot of family members and a lot of clients. We lead with empathy in our firm. We try to really focus on the holistic, the overall entrepreneur, right? Who are you as a person first before you're even a business owner? Who are you and how do you think about money? How do you manage your finances? But what is also your story, right? A lot of us have financial traumas that we are unfamiliar with. But my goal is to really help you uncover those things so that we can really effectively heal through those things and be able to open our minds and hearts to learning new information and then executing on that information. A business partner told me a while ago, she says, Lindsay, a lot of business owners are information rich and execution poor, which means that we'll attend the webinars, we'll attend the workshops, have the conversations, but after it's all over, what next, right? And we really hope that our clients, we really allow them and push them into a space of being comfortable executing, even in spaces that you're the most uncomfortable with. And for a lot of us, it is finances, especially if you weren't necessarily taught finances at home, or if you didn't even hear about financial literacy in the schools, right? So we try to make a tough conversation a little bit more palatable in our approach. Today, during our workshop for basic business finances, we're going to touch on a few things. So first, who you are, your personal finances, and that foundation that has been set for the business. We're going to get into the elements of class and how they impact your business. The elements of class are the 5 pillars that Kingdom Vision Consulting is ultimately structured upon, and how we support our clients. So focusing on credit worthiness, focusing on long-term wealth, asset protection, strategic banking relationships, and strategic asset accumulation, and how all of those areas that which ultimately create your financial portfolio, how they impact you and your business, right? Even personally. We're going to talk a little bit about the sources of capital, and then we're going to allow room for you guys to ask some questions, and for me to give you some answers that hopefully you can walk away with some new information. So as we get started, right, I like to tell my clients that before you can even think about your transforming your financial habits, you have to understand first, what are they rooted in, right? Understanding your why, understanding your financial mentality, right? Being able to articulate where you want to be financially, being able to understand yourself enough to determine whether or not you're even confident in your ability to evolve financially, right? A lot of times we think that it's just about the savings, it's about the credit, it's about, these other things and these other avenues of finances, in which it is, right? Those are all important elements. However, there is a starting point to all of this, right? Just like when we see a tree and we may see the leaves on the tree, but we know that that tree has a root somewhere underground that we can't see. All of our habits, all of our thoughts, our perspectives, and the way that we move, they all come from something, some type of root. And I try to really get clients to understand that it is so important to take time to sit with self, to understand self, and to understand the roots of our financial challenges, right? Even being able to ask yourself, what is your risk tolerance? Because we all know that no matter how much we love it, no matter how great we are in our particular area of genius, business can be risky. But are you willing to take that risk? Are you willing to bet on yourself? But you got to be confident enough to take the risk in yourself. But we try to make sure that you have the knowledge that you need to help you feel more confident in taking those risks to achieve your financial goals. I challenge you all, especially as business owners, to take a moment to think about your personal financial standing, thinking about your personal money mindset and how that contributes to your financial habits, right? As a call to action, I charge everyone as you take a step away from this presentation today that you do a self-assessment, but including in that self-assessment to complete what we call a personal financial statement. This is where you can kind of flesh out and write out all of the things within your financial world, right? Keeping up with all of your assets, all of your liabilities, and ultimately being able to see what your net worth is. A lot of times most people are walking around with a negative net worth, or most people don't even know their net worth and how to calculate that. But that's going to be something that's very important. One, Donna and Nick will tell you it's important in the lending process, but also too, it's important so that you can feel confident enough to know your numbers, right? Knowing your numbers is more than just about knowing your numbers in business. It is also about knowing your personal numbers, knowing who you are when you show up into conversations with your banker or with your accountant or with your loan officer, being able to say, hey, I own this, I have equity in this, right? Yes, I may have some debt over here on my liability side. However, this is what I can bring to the table. And you'll start to learn a little bit about why that's important, right? To be able to document your assets, because at some point they may be used as collateral, right, in the lending process. So I always try to tell business owners, take that time. I know that it's hard to find time in your busy schedules, and we're grateful that you found time for us today, but find some time, even if it's the first 5 minutes of your morning or the last 5 minutes of your evening, to really think about where you are financially, thinking about where you are mentally, financially, and where you're looking to go. Right? When we think about a point A, when we think about a point Z, we can't get to Z without understanding and knowing this starting point. If we don't know or have a starting point, it's almost impossible for us to figure out the direction to get there. In order for you to effectively achieve your financial goals, you have to figure out where you are right now so that we can be able to create a path that is strategic, that is intentional for you to achieve your personal and business financial goals. You will hear me preach it throughout the entire session, the importance of understanding your personal finances and business finances as a business owner, because while they are technically different, they are almost like a married couple. What one does directly impacts the next. What you have going on in your personal finances directly impacts your ability to really be able to grow and groom your business finances. We also know too that when the business finances, right, may have some challenges or some things going on, it directly impacts your personal finances. So it's so important as business owners that we're taking the opportunity to work on them both simultaneously, right? Not let's focus on the business and I'll sweep my personal stuff under the rug until I absolutely need it. No, we are brave in our financial thinking, and we as business owners are now understanding the importance of taking care of both. A student in Warren Tracy's class said that entrepreneurship is living a few years of your life like most people won't, so that you can spend the rest of your life like most people can't. And to me, what that looks like is being willing as an entrepreneur now to make sacrifices, including financial sacrifices, to be where I want to be in the future, and allowing my goal of seeing me in the future being extraordinary, right? Taking things a step further than what I even could have thought a year ago or 2 years ago. Because a lot of people are okay with being average. A lot of people are okay with being a little above average. But it takes some sacrifices. It takes intentional learning, intentional growing to be extraordinary. And because you're here today, I feel like everybody probably wants to be on the extraordinary side. Now, when it comes to credit worthiness, we always start again with that personal credit. Do you understand how your personal credit impacts your business finances and your business's ability to access capital, to be able to grow, to expand, and do all of the things that you like and are hoping to do in business? When it comes to your personal credit, it's very, very, very important that we understand how your character, right? Those 5 C's of credit, how your character impacts your credit, how your capacity impacts your credit, how the collateral that you may or may not have impacts your credit, how the capital that you may have impacts your credit, and even the conditions, these external factors, right? Sometimes we think that our credit profile or our, financial profile in general is only impacted by what we have going on internally within our household, within our businesses, but that's not true, right? We still have to think about the conditions that are happening around us, those external factors, very similar to COVID, right? When the pandemic first hit us, we had no idea what was going on, right? And we are 3 years later and still trying to pick up the pieces to what has happened. And for a lot of us, our personal credit was impacted by those external factors, right? That directly played a part on how our credit profile now probably looks. You want to think about your credit utilization. Are you overusing revolving credit? Are we taking our time paying down loans, right? We have to really think about those things, have those hard conversations with ourselves. And something that I really try to hope that a lot of business owners understand is that while you definitely need startup capital for your business, you will always need ongoing funding to move the business. I don't want you to get caught up in the trap of ruining your personal credit for the sake of the business, charging up personal credit cards for business expenses, taking out a number of personal loans that impact your DTI for the business, right? If you can, and if you're in position to, take advantage of business lending conversations. And you have an awesome CDFI right here in Maryland Capital Enterprises who want to support you. This is exactly what they do. And they want to support you before we start doing damage, right, in those areas, from the idea and from starting and implementing in that business. We want to think about collection items, right? Do we have some things just sitting in collections that we could probably get rid of, or at least, have conversations with lenders to plan the approach? But some of us are like, you know what, I'll wait on that, or that's not a priority for me right now. Guess what? It needs to be a priority for you, because the items on your credit profile, they tell a story, they tell a narrative about you. Whether the narrative that lenders will create is true or false, based on your perspective, it's what they are able to see. They may see collection items, and for you, you know that you might have lost a job or have gone through a divorce or have faced any other trial in your life that caused you to be able to not be able to pay a certain bill or whatever that went into collections. You know that that was a life-altering event. Lenders and people who are looking at your credit profile, they don't know those things, right? To a lot of them, they don't always get the opportunity to know you. Fortunately for you, MCE does, right? That's what makes them very different, very unique as a CDFI. But when you think about your average lender, the average person who may be even your average landlord, when they're looking at your credit report and they're seeing collection items, they're automatically creating negative assumptions about what has happened. So that's why it's so important to address these things in advance, head on, no matter how tough they are. Have a conversation instead of ducking those calls. Actually have a real conversation. Let them know you're standing. Let them know what happened, and really figure out how can these organizations, how can these lenders, these merchants support you, right? Sometimes we feel like our debtors are our enemies, and they don't have to be. It's because we've characterized them as such in our heads, which makes us avoid them and avoid tough conversations. But it's all about perspective. If there are any judges, any liens, you want to be able to address them, and address them now, honestly, for your own sake. Because even if you don't feel like you're capital ready now, at some point, you're going to want to apply for capital. And at some point, you're going to have to face, right, the things that make up your credit profile. And you rather do it proactively than being faced to do it when you're in the middle of the lending process and you know you absolutely need these funds. Do it now. Be proactive. It starts by pulling your credit report so that you understand what's on it thoroughly. Annualcreditreport.com. They give you a free credit report from all three bureaus. While you can choose whether or not you want to pull all three at one time, it is still important to at least review them all, right, throughout the year, so that you understand what's going on in your credit, so that you are not caught by surprise when people, lenders, etc., pull your credit and they have questions. You want to know, you want to be aware, but you also want to be proactive in clearing things. Another element of being credit worthy is making sure that you are setting your business up to be able to also build business credit. That is so important, okay? It's so important. And honestly, I say you want to start as early as you are financially able to. At least make sure that we take care of the basics of just building the basic business profile. And you can do these things before you're even actually ready to start applying, making sure that your business name, right, one, is legally registered, but also that you have a name and an address, a website, an email. And if you have an email for your business, I personally would recommend, right, purchasing your domain instead of having cheesecakes at Gmail or at Yahoo. Get you a domain where you can have info@cheesecakes.com, because it makes you look more professional when it comes to lenders. They want to know that they're supporting a real business and not just a hobby, right? The hobbies and businesses are very different. And sometimes we don't think about that. Sometimes we don't think about how others will perceive us based on what we are giving out. I like to personally recommend not using PO boxes. Sometimes we have to, but not using PO boxes, having a virtual business address that is a physical location. When it comes to the lending space, that is important to them. And even if it's not as important to some of your alternative lenders, it's important to your major lenders. And you want to make sure that you're just creating the foundation from the start. Phone numbers, don't use your personal phone number. Tap into a business line. You can get a phone number via using Google. You can go to Ring Central. There are a number of providers out there that you can tap into. Making sure that you understand your industry codes, right? What is your next code? What is your SIC code? And understanding whether or not your business is on the restricted list, right? There are industries that are on the restricted list. So when lenders see businesses in these industries looking for capital, they look with some extra eyes, right, to make sure that that particular business in that industry can, one, afford what you're asking for, but also two, they're trying to determine whether or not this risk is worth it. I have seen in the banking space where some businesses, just because they're in specific industries, automatically just get declined. But I've also seen in some cases where the business profile, the overall business makeup and financial standing supported the bank in giving them access to that capital that they was looking for. So you at least want to know, right, if you're in that list, so that you also know how to extra prepare yourself when it comes to lending conversations. You want to absolutely make sure that you have an EIN number. It's almost like your social security number, but it's for the business, your employer identification number. You want to make sure that you have a business bank account, right? And not just having a business bank account to have it, but actually using the business bank account just for business transactions. We are not commingling funds anymore. And even if that was your story prior to today, now that we know better, we are going to commit to doing better. We want to make sure that we are separating our personal from our business finances very intentionally, okay? Having that business bank account, operating your business as a business, using your accounts only for the business. When you are ready, right? When you have the capacity, making sure that you are creating a NAV account. NAV is almost like your business credit marketplace. It can match you with lenders. It can show you your business credit scores through Paydex, which is through Dun & Bradstreet. You have your Equifax credit score. NAV also, if you plug in your social security number, it'll also help you keep up with your personal credit changes. Another bonus of NAV is that they do have a free version, but if you have the paid version, that paid version also reports as an account, as a trade line account on your business credit report. So even if you pay for the NAV account every month, it'll show up as a vendor and show your on-time payments for that, which will also help you build your credit. Making sure that you have a DUNS number, right? It plays a huge role in enabling your business to borrow without a personal guarantor. It takes time, and a lot of times you may be the personal guarantor for a lot of lending opportunities for your business, but we still want to be proactive in having that DUNS number and being intentional about building our business credit profile. Making sure that you are educating yourself on Equifax business credit, Experian business credit, and then learning about vendor accounts, these net 30, net 60 relationships. Starting with those will definitely help you start building positive business credit. And you can build vendor relationships even before you have good credit, okay? These things are important. I know a lot of times we see on social media, oh, if you need business credit and you don't have good personal credit, it's okay, yada, yada, yada. They take you through the tier system. That's a part of that tier system, having those vendor accounts, those net 30, net 60 accounts, then having those trade lines, and then being able to graduate into a space where you can get department store cards, your Staples cards, etc. However, it's a process, and you want to make sure that you're checking the box through your process, but still not forgetting that we got to make sure that we're taking care of our personal credit as well, because following those business credit steps without taking care of your personal credit is only going to get you but so far. That's why it's important to do them both, to make adjustments to them both simultaneously, okay? Long-term wealth. As entrepreneurs, it is so important to think about the future of your finances, right? In retirement planning, your average entrepreneur typically doesn't feel like they have the mental capacity, let alone the financial capacity, to plan for their future. But retirement planning is so, so, so important. Thinking about whether or not you have any old 401ks out there that needs to be rolled over. Thinking about setting up that Roth IRA or that SEP IRA, that self-employment pension plan, that simple IRA. Having something that you can contribute to on a regular basis to make sure that when you are ready to tap into retirement, you're not forced to keep working, because Social Security isn't enough. We cannot depend on that. We don't even know if Social Security realistically will even be around years from now, right? Decades from now. So it is so important for you to start planning, and it is imperative for you to start planning to do so as a business owner. Because as a business owner, you no longer have the luxury, unless you're still working a 9 to 5 as well, you don't have the luxury of having an employer create and sponsor an account for you and contribute to that through a match. You are the employer, so you need to set your business up to be able to help you contribute to your retirement plan. It is imperative. It should not be an option anymore. When we walk into Walmart or any other department store and we see people checking the receipts, and a lot of times we're looking at senior citizens checking those receipts. I promise you, the majority of them are not working because they want to, because they got bored. They're working because they have to, because their fixed income is not enough. You do not want to find yourself in a situation where you spent years and years investing in your business and your business did not invest in you in that way. And when you get to a certain age and you no longer feel like you want to run your business or are no longer physically able to, and then you don't have any retirement cushions. It is important that your business takes care of you and your retirement goals, just like your employer would if you were working for someone. It is so important, so important, so important. And even taking it a step further, as you hire employees, it's important to be able to enhance your compensation package, especially because turnover can be at an all-time high right now. We have so many people who don't want to work for anyone just based on, honestly, sometimes what they're not receiving from that employer. While you are a small business, you still have room and the flexibility to create retirement opportunities and other benefits for your employees. We have to think further. We can't just think like small business mom and pop shop. We have to make sure that we are preparing our mindset to think larger enterprise, that we are contributing to the community, right? And a part of that is, yes, hiring and providing jobs, but not just providing any jobs, providing jobs that can help other people create a sustainable foundation for themselves. Asset protection, that covers a few areas, right? A very important piece is insurance coverage. Do you have proper insurances for the business, but also personal coverage? Do you have enough coverage that will take care of any debts that may need to be covered when you close your eyes for the last time? We don't want to be leaving our family in a financial burden situation when we leave here. We do not want that. They're already going to be mourning your loss. We do not want them in a financial rut because of what we left them in. We want to be proactive. We want to do our part, right? And making sure that we are covering and protecting our lives because you are important. You matter. And understanding that your business can have life insurance on you, but you got to have those insurance partners in your life that make up your financial dream team so that you can have access to this information. A lot of people also don't realize how insurance can also help you when it comes to tax planning and tax savings. It is imperative that we're having these conversations. No matter how tough, no matter how unfamiliar you may be with the subject, it's just about being able to pull in the right people who you can trust, who can educate you. Another very important element of protecting your assets is estate planning. We have seen way too many nightmare cases when it comes to celebrities who did not have an estate plan, a will in place, trust funds in place. We saw, I believe, Aretha Franklin, Prince, even Chadwick Boseman, they did not have estate plans, right? So their families lost a lot of money to the state. You work very hard for everything that you have. You want to be very intentional about making sure that your family can receive those benefits, those assets when that time comes. And we want it to be a smooth process, as smooth as it can be. We also want to think about business succession planning. What do you want to happen to your business after your passing or after you decide to retire? Are you looking to sell the business? We can't automatically think we're just going to pass it on to children because not all children want to step into those footprints. That is not always the case. So sometimes we want it to be, it's just not. So you still have to make sure that you are covering yourself and having a succession plan and having that plan being documented well in your operating agreement. That is so important. We gotta have these conversations. Having an estate planning attorney who you can have in your back pocket. Even if they're not on a regular retainer, you still want to have access to one who can support you, help you draw up your proper documents. Even understanding that wills are living documents, right? As your life changes, you want to make sure that you are updating. I say at least update once a year. I've seen so many nightmare situations where couples who might have gotten a divorce didn't update their will, and that spouse that they didn't even like anymore walked away with everything. And sometimes your kids don't even get it because they're looking at what you have in that will. How is it set up? You want to make sure that you're reviewing it and updating it regularly, especially after huge life-changing events. It is so important. It's underestimated, but it is so important. You want to think about strategic banking relationships, and this isn't talked about enough. It's not talked about enough that a lot of our small business owners are underbanked or unbanked, period. Right? Using Cash App, using Venmo, other platforms. Some people are using those solely with cards and not having banking relationships. Using PayPal solely and not having banking relationships. While we may not always trust the bank, the system, and their approach, we still need them. And it's important to recognize why we need them for a multitude of reasons. One, they have a lot of products and services that honestly you do need personally and in your business, from banking accounts to different credit products or investment products. Some banks still have insurance products, and if they don't, then they have insurance partners. Being able to access their online banking tools, being able to have that safe haven to protect you, right? To protect your finances, especially because fraud and phishing schemes are at an all-time high right now with our technical advances. You want to make sure that you are locking your money up in a safe place and you are intentionally activating those internal resources within your banking institution. A lot of people don't realize also that your banker, having a business banker, a lot of times can be the difference in whether or not you gain access to information or not. I remember when I was a banker, I was a key resource for a lot of my clients, pointing them into directions like alternative lending sources, sending them to CDFIs when they couldn't get traditional bank financing, sending them to technical assistance providers when they needed that coaching, sending them to grant to organizations that were offering grant opportunities for their business. You miss out on opportunities and resources and information when you do not have a business banker. You absolutely need one, and you need it for your own sake, okay? Also being able to understand how to utilize these products and how to utilize these products where you can leverage them. Managing them properly is also so important. I try to tell business owners, you want to be able to diversify your banking relationship. You want to make sure that you have a variety of accounts that you use for specific things, because that also shows the bank that you're investing in them, that you are a committed client. A lot of times we're just looking for what can we get from the bank, but the bank also wants to know, how can you do your part as a client in deepening your relationship with them? Because they have the resources. It's about, are we tapping into them and are we being a good client? Or are we that client that every time we walk in a branch, we're on the phone, we don't want to speak to nobody, or when the teller want to introduce you to a banker or to a branch manager, not today, I'll come back. That is your loss a lot of times. You just don't even know it. But when you are in a space where you're ready to build and leverage products, having them in a way that can help support your financial growth. I like to say you want to have multiple bank accounts. Just like personally, you want to have multiple bank accounts used for different reasons. It's bigger than just having a checking and a savings. It's about having different checkings for different purposes, having an operating a checking account where that's taking care of a lot of your operating expenses, having a payroll checking account so that you, when you have expenses that may pop up in operating, it's not impacting your ability to pay your team, right? Having multiple savings, have an emergency savings account for the business. Just like we preach, have an emergency savings account for your personal, you want to make make sure that your business has emergency savings accounts, because things can happen and you want to have resources that you can tap into because you planned and because you planned in advance. You want to have a tax savings account. You know, as a business owner, you're responsible for taxes. It's no reason why we should be waiting until the end of the year to figure out what we owe, and then we have to scramble and scram and try to pull together resources. It's about being active, being proactive in your planning, having that tax savings accounts where you're putting away money every month consistently. So when it is time, when you do get that letter that you may owe money, you already have it, and you are not putting that burden, that stress on you, so that you can free up your mental and emotional capacity to focus on other things out here, like business development, bringing in more clients, increasing your income generators in your business, but also being able to leverage their credit products in different ways. Every business owner should, at the bare minimum, have a business credit card, because there are business expenses that come up that you don't always want to exhaust your cash flow from. If you only have $2,500 in your business account and you have to go purchase new equipment because your stove went out or something happened, you don't want to have to exhaust all your cash and you're at zero in the bank. You want to be able to use that business credit card. And then if you need to, make minimum payments until you can get the money up to pay it off. But at least you have an extra cushion. It's about leverage and knowing how to leverage products and services, even lines of credit, understanding how can you use them and how they differ from a credit card versus a loan. Lines of credit are revolving. You can tap into those. You can use them, pull the money into your account, just like cash. Use it, pay it off, and you still have that money available to use again. We know that if you take cash from your credit card, you're going to be hit with a cash advance fee, I'm sorry, and it's going to be a very high charge, usually 24% a lot of times. You don't want that. We want to be able to be intentional and proactive about how we're leveraging the different products that our institution has that can help us to be able to grow and build our business. Understanding the difference between their loans, secured, unsecured, equipment loans, right? Understanding those differences so that you know how to use them when that time comes that you need to leverage them. Another important S is strategic asset accumulation. In general, we all know how to accumulate liabilities. Nobody has to teach us how to go out there and spend money. Nobody needs to teach us how to go out there and get ourselves in some debt. I think we all kind of just naturally know how to do that. But do we know how to be intentional about building our asset column, about purchasing things that appreciate for us over time, about purchasing things that appreciate and may give us monthly cash flow, about having assets that can be solid assets to be used as collateral for lending opportunities for your business? It is so important that we start shifting our mindset. Instead of spending money shopping on the latest bag or latest shoes because we want to go out here and keep up with the Joneses or impress people, how about we say, you know what? No, I'm going to add this money to my investment savings account so I can use that savings account to go and purchase a rental property, or to go and purchase a vehicle, right, that can be used for Turo or other platforms that can make you money. It is so important that you learn how to create passive income, especially as business owners, because you cannot always predict what will happen in business. Yes, we can create projections. Yes, we can plan, but we don't know. We have no idea of what could come. So we want to be intentional about planning and being proactive. Throughout the pandemic, as I was building my business, I was able to use passive income streams from rental properties to be able to take care of me so that I can build the business, but also build the business without being extra stressed. When you don't have a lot of other income streams, you put 10 times more of the pressure on your business to perform, because you know that that business has to perform to take care of you. And that business also has to perform to take care of the business itself. This is before we even get to your team and everyone else around you. You don't want to have to put that extra stress on your business to perform, especially when you're in the startup phase. It can be to your detriment a lot of times. So you want to be able to be intentional about creating passive income streams. It is so, so, so important. But also being able to focus on increasing your net worth. We talked about earlier creating that personal financial statement, having your asset column, having your liabilities and subtracting that to see what you're worth. We want to be intentional about adding assets that can help us increase our net worth. While purchasing some assets may come with liabilities, it may come with a debt, that mortgage, that auto loan or whatever, but we want to be very intentional about what type of asset we're purchasing so that we can be cognitive of the appreciation, which helps to give us equity, which also helps to build our net worth, even when you do have that liability that you are responsible for. It is so important. And as you create that extra income, you can use that extra income to pay down more debt, which paying down more debt also helps you to increase your net worth. But if we're not having these tough conversations, if we're not conscious of our money mindset and how we think about money, how we feel about money, we're not going to be able to do these things effectively. And we're going to find ourselves in a rat race. For some people, they live paycheck to paycheck working for someone else. And some people, even as an entrepreneur, you feel like you're living transaction to transaction. You absolutely need to have transactions this week to be able to pay a bill. You don't want to operate that way. We want to be proactive always, because being reactive, it honestly just takes you a couple of steps back. When it can be avoided, we can avoid it. There are tons of resources out there. You have the Women's Business Center and MCE that you can partner with. You have a number of other nonprofits out there. You have SCORE, you have SBDC, you have Operation Hope business coaches. There are so many resources out there. Honestly, I say take advantage of all of them. All of them. You can never have too many coaches and mentors. Understanding that they're going to all speak from their different perspective and based on their current company structure. But understanding that they have resources that you need. Take what you need, whatever's not relevant to you. Okay, keep moving. But when you take what you need, being able to execute on the things that you are learning, that is so important. It is so, so, so important. Important that we learn to be proactive in our finances. Even think about sources of capital as you're starting your business or as you are expanding your business. Being able to know what your options are. Being able to know the resources that are available to you. Some personal resources, family, friends, tapping into your personal network. Or external resources, right? Your banking institutions, your CDFIs, your government institutions that offer loans through banking institutions, your community economic development departments, city, state, local resources that can support you, even crowdfunding, angel investing, venture capitalists. There are tons of resources out there that can provide you with capital to grow and expand your business. But you have to make sure that the business is worth that investment. Making sure that you have a business plan and a financial plan. Making sure that you have, resources, right, available to you, that when a lender asks, do you have mentorship? That you can say, absolutely, I'm working with this firm, with that firm. Do you have a financial dream team? Do you have a business banker? Do you have an accountant, an insurance agent, a lawyer? Do you have these resources available to you? And if you don't, I charge you today to walk away and start gathering those resources. Start pulling together your financial dream team. Because it's so important. It is their job to know and to be experts in their zones of genius, to support you. You are amazing at whatever you do in business. That's why you're in business. It's okay that finance may not be your thing, but it's important that as a CEO, you understand how to tap into your resources to bring in the people and the professionals that you need. Just like when you are hiring, sometimes you have to hire people who are more intelligent than you, who are more skilled than you in certain areas so they can help you achieve your goals. It is not a stab to your ego to have to tap into financial support. You have to understand the gap and know how to fill that gap. You guys have a team here. You have a support system here. And I know without a shadow of a doubt that Donna and Nick and their team will be here to support you. They are going to advocate for you. I can promise you that. Tap into those resources, ask those questions, be confident in gaining the knowledge that you need to make informed financial decisions. I hope that this presentation was helpful to you. I hope that it helped you to kind of just think about your personal and business finances in a different way. I hope that this basic business class, right, was much more different than what you probably anticipated. A lot of organizations, a lot of people don't tap into business finances the way that I do. And I have the honor of have worked on the inside. I understand exactly what banks are looking for. I know what these nonprofit organizations are looking for. And I want to make sure that you get this information in a way that is palatable, but in a way that don't make you feel overwhelmed or less than. I wanted to empower you. I wanted to inspire you because I know that you can do it. I believe in you 1000% to go in and transform your finances, personally and in business, so that you can create that legacy for your children, nieces or nephews or grandchildren or whomever you have close to you that inspires you and encourages you to do what you do every day in business. Again, my name is Lindsay Peel. I am excited to be here on this journey with you, and please feel free to ask any questions.
If you have any questions, just feel free to unmute yourself and go right ahead. Okay, so you know what? While you may be thinking of some questions, I'll do a little bit of housekeeping and then open it right back up. Lindsay, thank you so much. Lisa wanted me to also tell you thank you so much. She's sorry she wasn't able to be here. I mean, I've seen this presentation a few times and I feel like I learn new things every single time. Especially at the end where you're talking about taking advantage of every single resource. Everybody here, just so you know, we are service providers and we love it when you talk to other service providers. It is not competition, it is collaboration. People know stuff that we don't know, and that is okay. So, you know, make sure that you go ahead and do that. We do have a lot of free events coming up. Part 2 of this, Basic Business Finances Part 2 is going to be February 23rd. February 22nd, we're going to be doing our first steps in starting your own business. And then we're going to do what is a business model canvas and why do I need one on March 7th. We also have an in-person conference in Salisbury on March 3rd. It's our Women's Business Center conference. It is free to attend if you sign up. Well, also, if you wanted to be a vendor or a sponsor, just contact me and I'll put you in contact with the right person. Donna and I have both put our contact information in the chat. Feel free to reach out to us if you have any questions, want to get started on anything, or, you know, any other business related stuff at all. So that is what I have. Are there any other questions or comments from other MCE folks? Nope. All righty. Well, we'll get out of here a few minutes early, give you a few minutes to get back from your lunch break. Lindsay, thank you so much. Everybody else, thank you for coming. I hope that you all learned as much as I did. And we'll see you soon. Thank you very much.
Have a good one, everyone.